Well, today we are discussing one segment of the market, one part of the market that we don't discuss too often, given the fact that it's typically been an institutional investor's domain and a domain which has been very heavily regulated with a lot of restrictions placed within the investment as well as in the controlling of REITs and InvITs. So we are talking about REITs and InvITs, and SEBI has typically maintained a very high profile of restrictions as far as these instruments are concerned. However, yesterday there have been two new rules that have come in, and market analysts believe that the SEBI mandated new rules will actually ensure that there is greater liquidity, greater depth, as well as greater participation from retail investors within this particular instrument. Now, so what has SEBI done? Number one, for both REITs as well as InvITs, remember, there have been restrictions in terms of the lot size. The minimum lot size for investments, even during the IPO or the REIT, has been 50 units or multiples of 50 typically, and the minimum investment size has been closer and in excess of rupees 50,000 in a typical REIT listing. However, SEBI has said that this particular minimum subscription limit be brought down to 10 to 15,000 rupees, and the lot size of the REIT, according to SEBI, should be brought down to just one unit. So again, from a 50 minimum investment limit of 50 units, it's going to be brought down to one unit, and a lot of analysts on the street believe these moves are very good. They believe it will enhance liquidity, improve depth in the sector. They say the move will yield a positive response from the market. Remember, earlier minimum limit was still quite high for many retail investors, and they believe that retail investors will now be able to participate in these instruments. Remember, every time you had to buy a REIT or an InvIT, you had to fork out initially a minimum one lot buy order, and that would involve buying close to 50 units. This entailed a very high initial investment into the REITs and InvITs, and SEBI has now decided to bring it down so that it is more accessible, more affordable, and also help retail investors enjoy the benefits of having a REIT in their portfolio. Now remember, due to the earlier lot size constraint, liquidity was weak despite a good yield on offer. Analysts also say that most of the REITs and InvITs have ensured that they would be having a much higher dividend payout going forward. However, one thing to keep in mind is that especially for REITs which have commercial properties is going through a tough time due to the multiple lockdowns, and there have been multiple rental renegotiations that have been in talks, and again, this is something that could have an impact as far as the earnings of these instruments are concerned.